Hello, investors. This is Ted Zhang, portfolio manager with Revere Asset Management. Today is Tuesday, January 14th, 4:59 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Stay in the market. We still have it labeled short-term pullback, although you could classify it as a pullback or correction if you happen to want to. Uh, Go into the correction gauge. We have market leaders currently at neutral. We have some leaders showing distributive action and breaking down, but other leaders showing relative strength. So we don't believe that market leaders deserve a red arrow yet. However, major indexes below 21 EMA and 50-day SMA. So we have red arrow assigned for both those short-term trend and the medium-term trend. And then the long term is still above the 200-day simple moving average with the green arrow. What happened today? Gap up on soft PPI, which is good news, but a volatile close. 21 over 21 list, up 1.77%, 16 up, 3 neutral, 2 down. That shows that leadership is still acting strong. Big 8 down 1.05%. You can see that stands out today, and that is the mega caps dragging down the market weighted indexes. RGA up 0.81%, S&P up 0.11%, RSP equal weighted up 0.81%, Qs down 0.09%, equal weighted up 0.58%, Dow up 0.52%, mid caps up 1.18%, small caps up 1.13%, 60/40 up 0.88%, and GROTECTION up 0.27%. Starting off with the S&P 500, we gapped up today about 38 basis points. Pretty much we just had a volatile chop day. We sold off, rallied back, sold off, and then rallied back into the close. Yeah, this is a scenario where it's better to do less. As you can see, chop is the ultimate killer to portfolios, and we're really just building lower highs, lower lows, lower lows, lower highs, and lower lows. 8 and 21 is crossed below 50. 50 is declining as well. RSP, hammer off the 200-day and follow through so far. RSP, mid caps, and small caps are actually green year to date and leading this year, but still below key moving averages. Qs, the index that closed red. This is primarily due to mega cap tech, another distribution day coming in. This 500 level continues to remain key. 821 EMA is sloping down, 50 days flattening. That is not a good sign for the Qs. Equal weighted, also hammer off the 200 and falling through so far. The Dow hammer yesterday didn't quite reach 200, reclaimed the 8 EMA today. And much of the Dow equal weighted indexes, small caps and mid caps, just show how much behind or how much under the hood has been destroyed over the last month or so. We might start to see some breadth expansion once again off extremely oversold levels. Mid caps pretty much found support, hammer off the 200, falling through so far, but it's a declining 21 and 50 days flattened. Russell also hammer, undercut, reclaim the 200-day, fall through so far, reclaiming 2200 as well, but still below declining 821 and 50-day. So we're definitely not out of the woods. Volatility index backed off, back below 20, which is a good sign, but still elevated. So expecting more volatility and more chop, especially below the 821 and 50-day moving averages. The dollar pulls back on softer PPI, so that's a good start, but still trending above the 8, and the 21 EMA has been the guardrail this entire move up, so it'll be key to see what the dollar does there. Gold bounced so far off the 821. That should be a better picture, actually. Let's do that. The 50 days flattened, so we might need to chop more around here. SLV is still living really below the 200, right on the 200. Super weak action. Gold miners reclaiming the 821, but heading into a declining 50 and flattening 200 day. So I expect some resistance right there. And yeah, that should present some trouble. Bitcoin, undercut reclaimed. Let's go to this. Undercut reclaimed 90,000. A decent amount of force, actually. We're following through so far, but we are rejecting the 97,500 area, which is also the 50-day moving average. I'd love to see Bitcoin go off the 100K, go sideways, and then take that out with high volume. And then we'll go to bonds real quick. 1 year and 2 year do back off a bit, but still elevated after the move 2 days ago. 10 year continues to trickle higher as well as the 30 year. 10 years pretty much at 4.8%, 30 years almost at 5%. So the bond market's telling us it's either worried about the budget deficits and the debt, or it's worried about higher growth, or not worried about higher growth, or it's pricing higher growth and higher inflation. So that's it with the inter-asset correlation. We'll go to the tail of the tape now. We're operating under the bear case, sustained break below the 21 EMA. Day count, I classified it as up one, up two. Still 5 days below the 8 EMA, 5 days below the 21 EMA. Expectations are negative. Strong sectors, bond yields were trickling higher. Utilities, financials, builders, regional banks, home builders, and Bitcoin were green today. Dollar, healthcare, communications, biotech, and Mag 7 were red. So what we did today, we bought a little piece of Tesla VST. Those are definitely relative strength stocks, so we're looking to build into those. And trim Reddit ALAB. Our RVAB is 1.01 with a rebar of minus 2.96%. The bottom line is gap up on soft CPI and a volatile close. So I want to showcase some relative strength stocks, some charts of interest from my end, because that is the main part of our jobs is to continue monitoring the leaders in relative strength stocks as markets correct, because they often will be the stocks that break out with the greatest velocity and lead to the biggest moves if such once the correction or eventually when the correction or pullback does end. Continue to monitor that. And we are day two up now. So we're starting to look for a follow through day. First one is MBIS, AI infrastructure name, broke out of this cup of handle, continues to float higher. Instacar as well, gapped up and held up strongly. There's been accumulation the last 4 days. RS line is looking to make new highs as well. VRT continues to build this handle. We had a shakeout below the 50, reclaim the 50, 21, and the 8. Really starting to build this right side here, and you have that pivot right there. Geo continues to make a new high. It's private prisons, bullish under Trump. Burroughs makes a new 52-week high as well. Relative strength. RS line also new high. VST, RS line new high. Price, VST closes at a new all-time high. CEG, gapped up in the all-time highs on highest falling ever. Pulled back. We're just building a right side now. This still looks strong. This whole power generations group, GEV also gapped up on a price target upgrade. RS line new highs, price new highs. NRG, relative strength new high as well. Building this couple handle. This is lagging a little bit compared to GEV, CEG, and VST, but still is part of the group and strong. Hood reverses. The RS line is pretty much at new highs. This is building a base right at new 52 highs as well. App is still holding the 50-day. Relative strength 99. RS line is declining, but it is building this flag. So maybe we get an RS line breakout as well as price breakout. And since Bitcoin is strong, MSTR is hanging in there as well, just in that bundle of 821 50-day moving averages. So in the 21 over 21 list, let's go over the top gainers and then top losers. Bros, we already talked about this. New 52-week high. Hood as well. Made a new 52-week high, but reversed back into the base. This might just need a little bit more tightness, something like that. And then you can potentially break out. BST is, I talked about, all-time high, relative strength, new high. GEV, same thing, all-time high, relative strength, new high. BRT is building a base. CG, pretty much at new highs with a relative strength, pretty much at new highs. MBIS, relative strength, new high, and a new all-time high close. CLS, pretty much at all-time highs, relative strength, new high. EQT, natural gas name, new 52-week high. Actually, almost pretty much, no, not a new all-time high, new 52-week high with relative strength, new high as well. On the downside, Lulu rejects 400 and closes below the 8, but still trading above the 21. Google, kind of just struggling in this area. We got a reversal at 200, reversal at 200, another reversal here. So some porcupine characteristics. RS line starting to roll over as well. Avgo, Kind of just building a VCP. Nothing wrong with this action. Still holding the 21 EMA, but below the 8 EMA. Marvell is flat on the day, just reversed, but still building higher lows. So that still looks great. Reddit reversed off the 8 EMA, but still holding in there in the space. So that looks good as well. 50 days above 150 now. So that presents a great level of support there. It's nice to see our top five down, quote unquote, down names or flat names are still holding key moving averages. And so that just paints the picture that leaders are still healthy, despite many other stocks breaking down. I think this is a key time here where indexes are weak and we are seeing some chinks in the armor and leaders. This is really key to not get chopped up. To really stay patient. If you are going to try some names, much smaller size, tighter stops, but as we know, every year presents maybe 1 to 3 opportunities between 6 to 12 weeks of easy dollar. And that often happens above uptrending 8, 21, and 50-day moving averages. Like right here, another time right here, another time right here. So those are the periods we want to focus in on where we get the outsized gains in the markets. And sitting out, preserving mental capital, and re-engaging when a new uptrend starts allows us to fully take advantage of it because you aren't hesitating from previous frustrations. Rather, you're operating from a place of strength back into the new names with size and conviction. And that is fundamentally where the gains come from. Patience during the pullbacks and corrections and re-engaging in the uptrends. And that is the mandate of GROTECTION and ROBOTECTION, as well as TurboTection. We are looking to grow assets in uptrends and protect assets in downtrends. And with that being said, I'll wrap up today's video. There's not too much to do right now in the markets and to monitor relative strength, but we're always having our head on a swivel, ready to re-engage when the market tells us to. So as always, we'd love to hear from you. My email is ted@revereasset.com. Then you can reach out to Dan at don@revereasset.com. If you're interested in becoming, please reach out. And with that said, I'll wrap it up for today, Tuesday, January 14th. This is Ted Zhang, Revere Asset Management, telling it like it is. Thank you for listening and have a great rest of your week.